If you receive Social Security, Medicare, or any kind of government benefit right now, there are three specific changes taking effect in July 2026 that could quietly affect how much money you keep every single month. And here is what matters most. Most people won't find out about these changes until after they've already been impacted. So today, I'm going to walk you through exactly what is changing, who it affects, and most importantly, what you can do right now to protect your benefits. And we're going to cover all three changes step by step in plain, simple language. So stay with me, because by the end of this video, you're going to feel confident, prepared, and in control. I want to start by telling you about someone. Her name is Carol, and Carol is 68 years old. She lives in a small home in Ohio. She spent 35 years working as a school cafeteria manager. She raised two kids mostly on her own. She retired 2 years ago. She gets her Social Security check every month, and it's not a huge amount, but it covers her rent, her groceries, her utility bills, and her Medicare premium. And she lives carefully, and she plans carefully, and then one month Carol noticed something. Her check was smaller than she expected, not by a dramatic amount, but by about $220 to $300. She called her daughter called Social Security, and after 3 phone calls and about 2 weeks of waiting, they found out that Carol had missed a small but important update to her benefits. Something that had quietly changed the amount being withheld from her monthly payment, and it wasn't Carol's fault because nobody had sent her a clear letter about it, and she hadn't done anything wrong. But here's the thing. That $300 was groceries for the month. That was her electric bill. That was medicine she had put off refilling because she thought she couldn't afford it. And Carol's situation did get resolved, but it took weeks and it caused real stress. And I tell you Carol's story not to worry you, but because I know that many of you watching right now are in a very similar position where you manage your money carefully. Every dollar matters. And the last thing you need is a surprise reduction in your benefits because of a change that nobody explained to you clearly. And that is exactly why we are here today. So, let me now walk you through the 3 July 2026 changes one by one in clear, simple language. And we are starting with change number 1, which directly affects your monthly income. Starting in July 2026, there is an adjustment being made to Medicare Part B premiums. And let me explain what that means in plain language, because this is something a lot of people don't fully understand, and it matters a great deal. So, Medicare Part B covers your outpatient medical care, which includes things like doctor visits, lab tests, preventive screenings, and certain medical equipment, and most people pay for Medicare Part B through a deduction from their Social Security check every month, which means the money doesn't come out of your bank account directly, but comes off the top of your Social Security benefit before it even reaches you. And here's a simple way to think about it. Imagine your Social Security benefit is $1,800 a month. But before you receive that money, Medicare takes its Part B premium right off the top, and in 2025, the standard Medicare Part B premium was $185 per month. So if your benefit was $1,800, you were actually receiving around $1,615. And for July 2026, the Medicare Part B premium is being adjusted, and the projected increase based on current Medicare trustee estimates and government actuarial data puts the new standard premium in the range of $197 to $215 per month for many beneficiaries. And let me be very transparent here, because the exact final number for mid-year premium adjustments is confirmed by the Centers for Medicare and Medicaid Services, which is CMS. And I always encourage you to verify the most current number at Medicare.gov or by calling 1-800-MEDICARE. But the pattern is clear. Premiums are rising, and that directly reduces the net amount you receive each month. And let me give you a simple before and after comparison, so this becomes very real. Before, in 2025, if your Social Security benefit was $1,800 per month and Medicare Part B deducted $185 per month, your monthly take-home was $1,615. But after the 2026 adjustment, if your benefit stays at $1,800 per month, and Medicare Part B now deducts $207 per month using the midpoint estimate, your monthly take-home drops to $1,593, and that is a difference of about $22 per month. And some of you might hear $22 and think, okay, that's not terrible. But here is where it gets more complicated, and this is the part that catches people off guard. If your income is above a certain threshold and this threshold is lower than many people expect, you pay more than the standard premium, and this is called IRMAA, which stands for the Income-Related Monthly Adjustment Amount. And in plain language, if Medicare looks at your tax return from 2 years ago and sees that your income was above a certain level, they charge you extra on top of the standard premium, and the income thresholds for IRMAA are being adjusted for July 2026, which means some people who were not paying IRMAA before may now be pushed into paying it, and here is the basic IRMAA structure so you can understand it. If your income is under $106,000 as an individual or under $212,000 if married, you pay the standard premium only. But if your income is between $106,001 and $133,000 as an individual, you pay roughly $65 to $74 extra per month on top of the standard premium. And if your income is between $133,001 and $167,000 as an individual, you pay roughly $164 to $187 extra per month on top. And at higher income brackets, premiums can increase by $300 to $443 per month above the standard rate. So if your income is near one of these boundaries, even by just a few $1,000s, a July 2026 threshold adjustment could push you into a higher IRMAA bracket. And that could mean a difference of $60 to $300 per month less in your take-home Social Security income. And this is why that number, $300, is in the title of this video, because it is not an exaggeration, it is a real, documented possibility for people near IRMAA threshold boundaries, and the good news is there is something you can do about it. And I am going to cover that in the action steps later in this video, so let me give you a quick mini summary of change number 1 before we move on. Medicare. Part B premiums are increasing in the July 2026 adjustment window. Most people will see a modest reduction in their net Social Security payment. People near IRMAA income thresholds could see a much larger reduction of up to $300 per month. The income Medicare uses is from your 2024 tax return, which is 2 years prior, and you can appeal IRMAA if your income has dropped since then. Now, before we get to change number 2, I want to ask you something. Do you know what income number Medicare is using to calculate your premiums right now? Because if you retired recently, or if your income dropped in the last couple of years, there is a very good chance Medicare is using outdated income information, and you may be overpaying, and we are going to talk about exactly how to fix that. But first, let's get to change number 2, because this one is something that affects people who are still working part-time, or who have a pension, or who receive certain types of retirement income alongside Social Security. Change number 2 involves how Social Security calculates and adjusts benefits, particularly for people who are still working part-time while receiving Social Security, or who are newly retiring in 2026, or who are subject to the earnings test before full retirement age, or who are receiving benefits affected by the windfall elimination provision, which as of early 2026 has been significantly changed by new legislation. And let me break each of these down, starting with the Social Security earnings test update. And here is a question for you. If you are receiving Social Security but you are under your full retirement age and you are still working, did you know there is a limit to how much you can earn before Social Security temporarily reduces your benefit? And this is called the earnings test. And in 2025, if you were under full retirement age for the entire year, Social Security reduced your benefit by $1 for every $2 you earned above $22,320. And for 2026, that threshold has been adjusted upward to approximately $23,400 per year, or about $1,950 per month. And this is actually good news for people who are working part-time, but here is the mistake people make. They don't realize this rule only applies before full retirement age, and once you reach full retirement age, which is 67 for most people born after 1960, there is no earnings limit at all, and you can earn as much as you want and still receive your full Social Security benefit. But for people who are 62, 63, 64, 65, or 66 and collecting early, this rule matters a great deal. And let me use real numbers to make this very clear. Mary is 64 years old. She claimed Social Security early and receives $1,400 per month. She also works part-time and earns $30,000 per year. The 2026 earnings limit is $23,400, so she is over the limit by $6,600, and Social Security reduces her benefit by $1 for every $2 over the limit, which means her benefit is reduced by $3,300 per year or $275 per month. And that is a real and significant reduction that Mary might not be expecting if she didn't know about the earnings test. And here is the really important piece. This money is not gone forever, because when Mary reaches full retirement age, Social Security recalculates her benefit and gives her credit for the months it was reduced, so it is more of a delay than a permanent loss. But in the short term right now, while she is counting on that money, it matters very much. Now, this next part is very important, and it affects a specific group of people. If you receive a pension from a job that did not pay into Social Security, like certain state and local government jobs, some school systems, or federal jobs under the old CSRS pension system, you may have been affected by something called the Windfall Elimination Provision, or WEP. And if you or your spouse were affected by the WEP or a related rule called the Government Pension Offset, or GPO, I have significant news for you, because the Social Security Fairness Act, signed into law in early 2025, eliminated both the WEP and the GPO. And this is one of the biggest Social Security changes in decades. And what this means in real terms is that some retirees who had their Social Security benefit reduced by the WEP or GPO are now receiving back payments and higher monthly benefits going forward, and the average increase for affected individuals has been reported in the range of $360 to $1,190 per month, depending on individual circumstances, and here is where July 2026 becomes relevant. The Social Security Administration is still processing these adjustments for many beneficiaries, and if you or a spouse worked in a government job with a pension and believed you were affected by the WEP or GPO, and you have not yet received a notice or payment adjustment from Social Security, you need to contact SSA directly to ensure your case is being processed, because some people are receiving retroactive payments while others are still waiting, and you cannot assume it has been handled automatically if you haven't received official communication. So let me give you the quick mini summary of change number 2. The Social Security earnings test threshold increases to approximately $23,400 per year in 2026, which is helpful for working seniors under full retirement age. Exceeding the earnings limit causes a temporary benefit reduction, but the money is credited back later. The WEP and GPO have been eliminated, which is a major positive change for government pension recipients. WEP and GPO affected beneficiaries may be owed back payments and higher future benefits. And if you haven't been contacted by SSA about WEP and GPO changes, you should follow up proactively. Now, we have covered 2 of the 3 changes, and I want to make sure you stay with me for change number 3, because it is the one that surprises the most people, and it has to do with Medicaid and low-income benefit programs and a policy update that could affect people who receive extra help with Medicare or who are on certain assistance programs alongside their Social Security. And let me ask you this. Does anyone in your family receive Medicaid benefits alongside Medicare, or do you know someone who gets the low-income subsidy for prescription drugs, sometimes called extra help? Because if the answer is yes, what I am about to share is extremely important. Starting in July 2026, several states are implementing updated Medicaid income and asset eligibility thresholds, and additionally the federal guidelines for the Medicare savings programs, which help lower-income Medicare beneficiaries pay for their premiums, deductibles, and copays are being updated, And let me explain these programs first because many people don't know they exist, and many people who qualify for them are not enrolled. And there are 4 levels of Medicare savings programs. The first is the Qualified Medicare Beneficiary Program, or QMB, which pays your Medicare Part A and Part B premiums, as well as your deductibles and copays, and has an income limit of roughly $1,275 per month for individuals and $1,724 per month for married couples. The second is the Specified Low-Income Medicare Beneficiary Program, or SLMB, which pays your Part B premium only and has an income limit of roughly $1,526 per month for individuals. The third is the Qualifying Individual Program, or QI, which also pays your Part B premium at a slightly higher income threshold. And the fourth is the Qualified Disabled and Working Individuals Program, or QDWI, which covers Part A premiums for certain disabled working individuals. And the critical point here is that in July 2026, income limits for these programs are being adjusted upward, which means more people will qualify than before. And if you previously looked at these programs and thought you earned too much, it is worth checking again. Because a senior who qualifies for the QMB program could have Medicare Part B costs completely covered, and that is potentially $197 to $215 per month saved every single month. Similarly, the Extra Help program, which helps Medicare beneficiaries pay for Part D prescription drug costs, is also updating its eligibility thresholds in 2026, and Extra Help can cover monthly drug plan premiums, annual deductibles, and copayments for prescriptions, and people who qualify for full Extra Help could save up to $6,000 or more per year on prescription drug costs. And yet, according to the Centers for Medicare and Medicaid Services, millions of eligible seniors are not enrolled. And the July 2026 threshold update may make even more people eligible. So, let me connect this back to the $300 question from the title. Imagine a senior is currently paying $207 per month for Medicare Part B premium, $45 per month for a Part D drug plan premium, and about $60 per month in prescription copays. And that adds up to roughly $312 per month in total Medicare costs. And if that senior qualifies for a Medicare savings program and Extra Help, those costs could drop to near zero, which means a savings of over $300 per month. And if you qualify but are not enrolled, you are losing that money every single month, not because of anything the government did wrong, but simply because no one told you the program existed, or that the rules changed, or that you now qualify. One more update worth knowing about is that many states are in various stages of Medicaid redetermination, which is the process of reviewing whether people currently enrolled in Medicaid still qualify based on updated income and asset rules. And if you are on Medicaid, whether for long-term care, home health services, or as a supplement to Medicare, you need to make sure your state has current, accurate information about your income and living situation. Because people who miss redetermination notices or who don't respond in time can lose their Medicaid coverage unexpectedly. So watch your mail carefully. And if you receive any letter from your state's Medicaid office asking for information or documentation, respond promptly. And here is the quick mini summary of change number 3, Medicare Savings Program. Income limits are increasing in July 2026, meaning more people will qualify. Extra Help and low-income subsidy thresholds are also rising, so check your eligibility. Qualifying for these programs could save you $200 to $300 or more per month. Millions of eligible seniors are not enrolled, so don't leave this money on the table. And Medicaid redetermination notices must be responded to promptly to maintain your coverage. Now, let me quickly summarize who is most affected by these July 2026 changes so you know how urgently you need to act. You are most affected by change number 1 if you receive Social Security and have Medicare. Part B, if your individual income is above $106,000, or your household income is above $212,000, or if your income recently changed and you haven't reported that to Medicare. And you are most affected by change number 2 if you are under full retirement age and still working. If you worked in a government job with a pension not covered by Social Security, If you or your spouse believe you were affected by WEP or GPO, or if you have not received a notice from SSA about the Fairness Act adjustment, and you are most affected by change number 3, if your monthly income is under approximately $1,900 as an individual, if you are paying Medicare Part B premiums or prescription drug costs out of pocket, if you are currently on Medicaid and have received a redetermination notice, or if you've never applied for extra help or Medicare savings programs. Before we get to the action steps, I want to share a few common mistakes because these are things that come up again and again. The first mistake is assuming everything is handled automatically because Social Security and Medicare do update many things automatically, but not everything. And the WEP and GPO adjustments, for example, are still being processed case by case. So if you're affected and haven't been contacted, you cannot assume your case is in the queue. The second mistake is not knowing which income Medicare is using because Medicare uses your tax return from 2 years ago to calculate IRMAA. And if you retired in 2024 or 2025, or if your income dropped significantly, Medicare may be using a much higher income number than reflects your current situation, and you can and should request a review. If your income has changed, the third mistake is ignoring mail from government agencies, because letters from Social Security, Medicare, or your state Medicaid office are never something to set aside, and missing a deadline can result in coverage gaps that are very difficult to fix. And the fourth mistake is not checking benefit programs you might now qualify for, because the income thresholds for programs like Extra Help and Medicare savings programs are updated regularly, and someone who didn't qualify 2 years ago might qualify today, so it's always worth a quick check. Now, here is your action plan, and I am going to make this as simple and clear as possible, so you might want to write these steps down or pause the video and come back to this section. Step 1 is to check your Medicare premium notice by logging in to your Medicare account at medicare.gov or calling 1-800-MEDICARE at 1-800-633-4227 and finding out exactly what your current Part B premium is and what income information Medicare has on file, and what you are looking for is whether the income they are using reflects your current situation, because if you've retired, had a major life event, or your income dropped, you may be able to appeal. And the documents to find are your most recent Social Security benefit statement and your 2024 federal tax return. Step 2 is to appeal IRMAA if your income has changed and if your income drops significantly due to retirement, divorce, death of a spouse, reduction in work hours, or loss of income. You can file a life-changing event appeal using SSA Form SSA 44, which allows you to ask Medicare to use a more recent year's income instead of the 2-year-old tax return they currently have, and you should do this as soon as possible because the earlier you file, the sooner your premium can be adjusted. Step 3 is to contact SSA about WEP and GPO if you were affected, and you do this by calling the Social Security Administration at 1-800-772-1213 and asking specifically about the status of your WEP or GPO adjustment under the Social Security Fairness Act. And what you should ask is whether your benefit has been recalculated under the Social Security Fairness Act and whether there is a retroactive payment owed to you, and you should have ready your Social Security number, pension information, and any prior SSA notices you have received. Step 4 is to apply for Medicare savings programs or extra help by visiting benefitscheckup.org, which is a free tool run by the National Council on Aging where you can enter your information to see which programs you may qualify for, and you can also call your state health insurance assistance program, which is called SHIP for Free Personalized Help, because SHIP counselors are trained volunteers who help seniors navigate exactly these types of programs, and you can find your local SHIP at shiphelp.org. And you should try to apply before July 2026 to ensure benefits are in place by the time the new thresholds take effect. Step 5 is to respond to any Medicaid redetermination notice immediately, and if you receive a letter from your state's Medicaid office, you should open it right away because it will tell you what information they need and by what date. And you should gather any requested documents such as proof of income, bank statements, and proof of residency and submit them promptly. And if you need help, you can contact your local Medicaid office or a Social Security benefits counselor. Step 6 is to review your earnings if you are under full retirement age. And if you are currently receiving Social Security benefits and are under age 67 and you are working, you should calculate your projected annual earnings for 2026, because if you expect to earn more than approximately $23,400, a reduction may apply, and you should plan your budget accordingly while remembering that this is a temporary adjustment and not a permanent loss. Those are your 6 steps, and you don't have to do all of them today, but I'd encourage you to start with step 1 this week by just pulling up your Medicare account and taking a look, because knowledge is what protects you here. Now, I want to take just a moment to step back and talk about the bigger picture, because these 3 changes we talked about today are not isolated events. Every year, Medicare premiums are adjusted, every year, Social Security thresholds and limits are updated, and every few years, major legislative changes reshape the benefits landscape like the Social Security Fairness Act did in 2025. And the seniors who protect themselves best are not the ones who never face challenges, but the ones who stay informed. And here is what I'd encourage you to keep in mind going forward. First, bookmark Medicare.gov and SSA.gov, and check your account at least once a year, ideally in October and November, when the following year's changes are announced. Second, know your income thresholds, because the IRMAA brackets, the earnings test limit, and the Medicare Savings Program, income limits change annually, and knowing them keeps you in control. Third, don't navigate this alone, because SHIP counselors, Social Security Administration representatives, and legitimate nonprofit tools like benefitscheckup.org exist specifically to help you. And you don't need to pay a financial advisor hundreds of dollars to understand your government benefits, because free help is available, and it's good help. Fourth, think 2 years ahead, because Medicare uses your income from 2 years ago, which means decisions you make about income, Roth conversions, part-time work, or withdrawals from retirement accounts today can affect your Medicare premiums in 2027 and 2028, and that is not something to stress about, but just something to be aware of. And finally, take good notes and keep a simple folder, either physical or digital, with your Social Security statements, Medicare notices, tax returns, and any correspondence from government agencies. Because when you need to appeal something, or when you call to ask a question, having your documents organized saves you enormous time and frustration. All right, let's bring it all home. Today, we covered 3 July 2026 changes that every senior receiving Social Security or Medicare benefits should know about. And change 1 was that Medicare Part B premiums are increasing, and IRMAA adjustments could reduce some people's monthly payment by up to $300. But if your income has dropped, you may be able to appeal and have that reduced. And change 2 was that Social Security earnings test limits are being adjusted, and the WEP and GPO have been eliminated, meaning some government employees and their spouses may now be owed higher benefits or back payments. And change 3 was that Medicare savings programs and extra help thresholds are increasing, meaning more people now qualify for programs that could save hundreds of dollars every month. And we walked through a 6-step action plan to help you take control, from checking your Medicare account to appealing IRMAA to applying for savings programs to responding to Medicaid notices. And you now know more about your benefits than most people will learn this year. And that knowledge and that awareness is what makes the difference between being surprised by a smaller check and being prepared for it. And I want to say something directly to you. You have worked hard for these benefits, you have earned them, and you deserve clear, honest information about how to protect them. And that is what this channel is here for. So if you found this video helpful, please give it a thumbs up, because it genuinely helps other seniors find this information. And if there is someone in your life, like a spouse, a sibling, a neighbor, or a friend who receives Social Security or Medicare, please consider sharing this video with them, because you might be doing them a real favor. And if you have questions, drop them in the comments below, because I read them and do my best to answer them, and your question might be the question that helps someone else too. And if you want to stay informed, every time new benefit changes are announced, the subscribe button is right there, so hit that and the bell notification, and you will know when we post. And thank you so much for spending your time with me today. Take care of yourself, stay informed, and I will see you in the next video.